Hey traders, welcome back to my channel. Today we are looking at the Cot Report. Okay, so we're going to kind of go through it, the tool that I use to view it and stuff like that. I want you guys to keep in mind though that I'm definitely not an expert when it comes to fundamental trading. So that's not my style of trading. And Cot Reports are relatively new to me. So I'm just going to go through and show you what I use and how I use it. You do not need to use it this way. If I, say something that you don't agree with, by all means, feel free to, let us know in the comments below what you look at. So just keep that in mind. This is just my opinion. It does not really matter in the grand scheme of things. Definitely not claiming I'm an expert at this, but at the same time, it would be nice to go through it and just show you how I have been using it. So to kind of finally get into it, go to tradingstir.com, guys. This is the definitely the easiest website to view the Cot Report on. You can also do it on the official website, which I believe is, it's the CFTC website, but it looks very confusing and it's the same info. So if you just go tradingstir.com, I'll link that in the description below as well. This is what you're going to see on the main page. And for today's video, we're going to look at the Canadian dollar. It's just a random one I kind of picked out that we can look at. I got my chart up for it already. So we're going to look at, this is the actual Cot Report here. Okay. And basically what the Cot Report is telling us, you guys, are the number of positions opened and by who in the market. Okay. And obviously we're not talking about retail traders. We're talking about, banks, institutional traders, etc., which I'll get into exactly who we're talking about. But one little thing I do want you to keep in mind, and it does say it up here, but you probably can't see it, is that this is historical data, okay? Meaning the data that you see here is from last week, okay? So it's released every Friday, but it's from Tuesday's data. So it's still good, and you'll see why. It's giving you really, really good information about the market, but it is a few days kind of ahead. So if you're a scalper, you can definitely still pay attention to this, because even scalpers, you guys still want to know the overall trend. I know when I was scalping, I still want to know what my overall trend is, right? Because I don't want to be aversing a huge momentum or a huge trend with large momentum at any point in time, even when you're scalping and day trading. So this is still good information for you guys to take in. So when we look at the Cot Report, now I'm looking at the Canadian dollar, but you could have clicked into any currency that you want to look at. So I clicked into the Canadian dollar, and what the Cot Report tells me is the number of positions opened by institutional traders, hedge funds. These two down here, the other reportables and non-reportables, we're not really going to look at those because they're just not as significant. They just really don't make a big dent in price action, so we're not going to go over those. But I will briefly touch on dealer intermediaries, and these are basically what we call, you probably heard of it before, but market makers, okay? And because I don't want to misspeak too much, I did bring up the actual CFTC website so we can briefly look at it. And basically all this is telling us, guys, I'm going to kind of, I don't want to say dumb it down, but I'm just going to put it into really simplistic terms, because, they kind of, these documents tend to ramble a little bit and they make it hard to understand. So I'm just going to simplify what they're saying here. But basically what this is saying is that dealer intermediaries are usually sellers. Okay. So they're they can be banks. They can be, so it says, large banks. They can be dealers in securities, swaps. So they're looking to sell. Okay. And so they're usually doing the opposite of what everyone else is doing. And they don't make a huge difference in what we're going to look at, but I did just want to point out who this is so that you understand it. So when I'm looking at the Cot Report, to be honest, I don't look at this at all. This isn't really making a difference in what I'm doing. Again, if you do look at it and you want to leave down below, how you kind of incorporate that into your trading, by all means. But what I look at are these two here. And I'm going to clear this off now so it's not messy. I look at the asset manager, institutional, so these are the institutional traders, and the leverage funds, which are hedge funds. Okay, so institutional traders and hedge funds. These make the biggest difference in terms of what price is doing. And I'll show you a prime example here. We can see here that when we look at the number of positions opened, okay, so in this tab here, we can see these are the number of positions opened, okay? There are 45,000 open, long positions open, okay? Almost double what the amount of short positions open by institutional traders, okay? And they're still adding to them and they're still removing their short positions. So this tells me that if we were to look at a Canadian chart, okay, the Canadian dollar should be gaining value. And we can see that clearly when we look at the USD Canadian dollar, that the Canadian dollar has been has been gaining value, okay? And remember, this is the US Canadian dollar, so this would make sense that we're seeing a downtrend now, right? Now I'm looking at the 4-hour chart. Let's just go to the daily because we'll see this more clearly. But you can see we've had like a really strong push to the downside, and that makes sense. That's in line with what we're seeing because the Canadian dollar is gaining value, right? Now, another thing to look at, so I'm going to clear this off again because we're going to look at hedge funds next. So, and just to back up a bit, so the institutional traders, keep in mind that these positions here, so the number of positions you see entered by institutional traders, these are going to be like in line with the more long-term trend, okay? So institutional are more long-term. So just keep that in mind. That's like our overall trend, okay? The hedge funds, when you see a big shift in what the hedge funds are doing, this is going to be, it's going to take action really fast. So it's going to, like you're going to see that come to light a lot quicker than you would based on what the institutional traders are doing. So here we can see that we have more long positions, okay, than we have more short positions than long positions, which is actually contradicting what we just saw above, but you will see that they're removing more short positions, okay, and adding more long positions. So it is still in line with the Canadian dollar continuing downward. So in short, I really wouldn't be buying the US Canadian dollar right now. And you do have to keep in mind, like, you have to look at what's happening with the US dollar as well. So if the US dollar was really, really strong, right? Was really, really strong, and the Canadian dollar was really, really strong, then it wouldn't be like a really good opportunity to try to sell here. But if we look at the US dollar right now, so let's clear this. And this will give you some good perspective too in terms of actually entering a trade. So if we go into the US dollar, so we can see that the institute, okay, so we're adding short positions, right? And if we had looked at this probably 2 weeks ago, this would be a lot more clear because what we're seeing now is things are kind of evening out. Had we looked at this a few weeks ago, you would have seen, you know, some really different numbers here. But you can see that the hedge funds are adding, or the hedge funds have more short positions than long positions, and the institutional traders have more short positions than long positions. And this is where you really have to like sit down and really think about what's happening next. So the hedge funds as well. So look at this here. So the hedge funds have 12,000. So the hedge funds have 12,130 positions open, but they just removed 6,000, over 6,000, almost 6,500. Okay, so these are our long positions. So you got to think about what that means. They just removed a bunch of long positions. And this is actually, like, that's quite a significant number, right? When you look at how many they have open versus how many they just took away. But then when you look at the short positions, same thing. So when we look at our short positions, they have 13,000 opened, right? But they just removed like 5,500 almost. So really what we're seeing here is we have no clear direction, right? Like there's nothing really clear about this. Had they removed all these long positions and then, you know, added a bunch of short, or, you know, only removed like 100 short or whatever, we'd have a more significant move. But there's not really much significance here. And that's okay, because where the Canadian dollar is so bullish, we could still get a position there. What we wouldn't want to see here is the US dollar kind of taking off and a bunch of long positions being added, or short positions removed, you know, without kind of the counterbalance stuff that's happening here. So it's a good idea to kind of write things down and really think about it, because I'll be honest, like you really have to think about exactly what's happening and put it into terms like I just did. Like when you first glance at this, it can be really confusing. So you have to say to yourself, okay, they have 12,000 positions opened, but they just removed 6,000 long positions. And you really have to think about that, what that means. Because even for me, like I look at this and it can be really confusing. So just keep in mind again, and just to summarize, really what we're looking at here is the strength of a currency. So like I want to do one more example, okay? Because that one was a little bit of a mess. Let's see if we can get okay. So like, let's look at the euro. So we're looking at the euro strength. So what I can see right away, we have a lot more long positions open than we have short positions, a lot more. Okay. I know if we look at the euro USD, because I've been looking at the euro USD, we're going to see an uptrend. Yeah. Let me remove that, wipe that off. So clearly we've been in an uptrend, right? And that's in line with what we're seeing here. Now let's look at what's happening next. And remember, this is our long-term movement. So our institutional level traders, these are going to happen more over the long term. Okay. And we're adding to long positions. However, okay, and this is something to note here, they're adding a lot more short positions. Okay. They're adding 6,000, whoops. How many times will I do that? 6,000 more short positions. And actually, I'm interested to see, I haven't looked at this one yet. Okay. So they have 52,000 short positions open and significantly more long positions open. That makes sense. But they're taking away a lot of their short positions. So that's interesting, because that usually means, like, remember, your hedge funds, these are more short term. So this stuff's going to happen more in the short term. Now, this is from last week. This is from the 25th. So if we go over to the chart, you have to keep that in mind. It hasn't been updated yet today. So if we keep that in mind and go back to last week on the 25th, okay, let's see if I can find it. 28, 27, 24 is probably around here. Yeah, it's probably like it's around here. So this would be the area that we're looking at right there. That's where they decided to, so it would have been this week where they added or they took away from their short position. So we're still trending upward, because you have to remember, like, you have to look at, you have to keep perspective. Like, they still have a lot more short positions in the market. So this is just shifts that are about to happen. And this is where you really have to use your brain and say, okay, they've got 89,000, right, opened. Now they did take away a bunch of their short positions, but we're not seeing like a huge jump right now, because things are really, like, they took away a lot from their long positions as well. So you kind of have to use use perspective. Sorry, you have to really think through what's happening there. It would be different if this number here, if they added about like 10,000. If they added 10,000 short positions, that would be a lot. This would be a lot more significant. So because they didn't, and because we're seeing what we see, we're not seeing a whole lot of action. And that's in line with really what's happening. Like there's nothing significant really happening. And actually, if we want to get really technical, what we are seeing is, some consolidation here, maybe a rising wedge, could be a possible reversal, but we don't know yet. We need to definitely see more price action. But we are seeing some exhaustion, and that's in line with what we're seeing here, right? We still have more long positions, but we're adding short positions. The institutional traders are adding short positions. So you can actually see that juxtaposition in the charts. So it's really, really interesting. I'd love to get an example though, and I wish it's the worst when you're trying to teach people something or you're trying to, give people examples and things just don't line up. And that happens often because we can't make the market do anything. In particular, I know the Aussie is not a good one right now, but see if I can find. And same thing here. So the currencies are the market's a little bit whack right now, to be honest with you guys. It's really not the best to be. Yeah. So we're seeing a lot of conflicting numbers, but I think the Canadian dollar was a good example. That's why that was a good one to show you. Good first one to show you because it's making a little bit more sense. Like it's a little bit more in line with what's actually going on. We're not seeing too much confliction like we're seeing, the institutions and the hedge funds are adding to long and they're removing their shorts. And when that happens, it makes it a lot more kind of cut and dry. So yeah, but that's how I use the tool. So you're just looking at, in the most simple terms, currency strength. And I really want you guys to keep in mind just to break down what each thing means, and you just use it to, definitely don't use it to enter a position because remember this is historical, but use it as a reference for where you think the market's going to go and to give yourself kind of like it adds a little bit to your knowledge base on directional movement in the market and currency strength. So just use it as a tool to help you. That's what I do. And again, if you see a bunch of conflicting information there, then you're going to have to do your own technical analysis anyway, and you just want to keep in mind and keep perspective on what that means. So usually what will happen is when you're seeing confliction here, it'll all even out and things will end up kind of shifting eventually. So either one side will get kind of bigger like we saw here, and it'll make more sense in a few weeks. So that's it. Hopefully that made sense to you guys. Again, if you guys have any tips that you want to share when it comes to Cot reports, by all means, you can leave them below. This is just how I use it. I just use it as a tool to look at long and short positions that the big guys have open. That's really, in the most simple terms, what I use it to look at. It's not overly complex. Just make sure you're breaking down what each thing means. When you say it out loud and look at it, you'll see that it does make sense. And that's it, you guys. If you have any questions for me and how I use it, you can let me know below, and I'll see you guys in the next video.